Okay, so what kind of situation do we currently have from a weekly perspective on NZD CAD? Now, first of all, before making the full analysis on this pair, let's first speak about what we said in our previous analysis, which, by the way, I will link in the description of the video. What did we say? We said after this impulse to the upside, we wanted to see a retracement and then continuation to the upside. Why we want to see exactly this? Because if you have an impulse in the market, okay, after the market does something like this, the market creates an impulse. By definition, an impulse is a strong movement in the market that creates either a lower low or a higher high. But then the retracement, the supposed retracement, goes all the way up to create an equal high. So after the impulse, the market went all the way back up and created an equal high. And what did we say in the analysis, which you can go and rewatch, which is in description? We said we want to see the market make the move to the downside and create this inverted head and shoulders and continue to the upside, which is exactly what the market has done. Now, where is the next opportunity to be looking for a potential trade on NZD CAD? That is exactly what we will be speaking about today, but first, we need to start analysis from the monthly time frame. Now, on the monthly, what do we have? We have a market that currently has created this double bottom, and currently we are at the previous high. Now, there are two possible scenarios if the market creates something like this. The market can go to the upside and create this W formation, and at that point, it's definitely time to be looking for potential shorting opportunities. Or from here, the market can immediately reverse down, create a monthly inverted head and shoulders, and then make the move to the upside, which means that we can expect a bearish wave from here. Now, since the market is still below the area, we can definitely expect the wave to the downside until the market will prove us wrong. We go on the weekly time frame. Now, on the weekly time frame, everything is absolutely bullish. The market it was clearly shifting from a bearish market to a bullish market. So definitely we could expect this explosion to the upside, which is currently testing this very important weekly resistance from which we should see a nice daily retracement. We go down on the daily time frame. On the daily time frame, the market definitely seems overextended to the upside. Okay, we had a clear impulse. We should see a clear retracement before the continuation to the upside. So let's go quickly and see what we have from a COT perspective. So commitment of traders, what hedge funds are currently doing on NZD and on the CAD at the moment. So from a CAD perspective, what can we see? We can see that we were sitting at a positive net position number all the way up at 38k here, and we're now sitting at minus 33k, meaning that we went from having more longs than shorts from a CAD perspective, from an institutional perspective on the CAD, to having more shorts than longs from an institutional perspective on the CAD. So overall, definitely CAD can continue to get weaker. We go and see what we have from an NZD perspective, and we definitely want to see more longs added with the new report that will come out today, and net positions start shifting to the upside, given that this week definitely there has been some longing from an institutional perspective on the CAD, on the NZD. So going back to the chart, the way in which we will be approaching this with students is very simple, from a reactive perspective and not predictive. At the moment, everything is bullish. Okay, there is absolutely zero sign of weakness. Everything is bullish. So looking for a shorting opportunity right now makes absolutely no sense, because it would be just trying to short a bullish market, which never makes sense. But if we will clearly see inside of this area here, so basically when the market is testing this previous resistance, which is again resistance here, we will clearly see a deceleration and a distribution, and then from a 4-hour perspective we will see the market shift from a bullish market to a bearish market. Then we will start looking for a potential shorting opportunity if the market will provide to us one of our valid entries for a nice retracement. And then after the retracement, again, we will be waiting for the market that at that point will be in a bearish in a bearish environment from a 4-hour perspective, again to shift to a bullish market and to provide to us one of our valid entries for the continuation to the upside, the completion of the impulse correction and impulse pattern to the upside. But I will keep you updated on that. So first we will be waiting for a possible shift to a bearish market, and then we will be looking for a shorting opportunity, and then we will be looking for the continuation to the upside. However, if the market will just remain bullish all the time, the market will continue to the upside, which would be even better, because at that point we will have a monthly W formation and absolutely a very good probability for a nice short trade. So as usual, being reactive and not predictive until the market is below the area. If we will see a shift, there is the opportunity to be looking for a possible short and then a long. But if the market will just continue to the upside, it's even better because it will provide a higher probability shorting opportunity to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.